Imagine a country that sits on one of the largest oil reserves on Earth, a country with the second largest natural gas reserves in the world, a country positioned at the center of major global trade routes connecting Asia, Europe, and the Middle East, a country with millions of educated young people and enormous natural resources. Now, imagine that same country where the currency keeps collapsing, inflation stays extremely high, and many of the brightest minds are leaving. That country is Iran. And the big question is, how can a country with so much potential struggle economically? The answer is far more complex than most people realize, because Iran's economy is shaped by a mix of hidden power structures, global sanctions, internal policies, and geopolitical strategy. And once you understand how all these pieces connect, the situation becomes fascinating. The potential, Iran's hidden wealth. Let's start with something important. Iran is not a small or resource-poor nation. In fact, it has some of the strongest economic fundamentals on paper. First, energy. Iran holds one of the largest oil reserves in the world, but even more surprising is natural gas. Iran possesses the second largest natural gas reserves globally, only behind Russia. Energy alone should make the country extremely wealthy. Now add geography. Iran sits between Central Asia, the Middle East, and Europe. For thousands of years, traders crossed this region through ancient routes like the Silk Road. Even today, Iran's location gives it access to major shipping routes. One of the most important is the Strait of Hormuz. This narrow waterway carries roughly 20% of the world's oil supply. Every day, massive oil tankers pass through this route, and Iran sits right next to it. If anything disrupts this passage, global energy prices react immediately. So, from a purely strategic perspective, Iran holds one of the most powerful geographic positions in the world. But that's not all. Iran also has a large, educated population. Universities produce thousands of engineers, scientists, and technical graduates every year. This combination, resources, location, and talent, should normally produce a thriving economy. Yet the numbers tell a different story. Iran's GDP per person is around $5,300 per year. That is far below what you would expect from a country with this level of resources. So what's going on? To understand that, we need to look at something most outsiders rarely hear about: Iran's unique economic system, the hidden giants running the economy. In most countries, the economy is dominated by private companies competing in open markets. But Iran has something unusual. Large economic sectors are controlled by organizations called bonyads. These are technically charitable foundations. Many of them were created after the 1979 Iranian Revolution. Originally, their purpose was noble. They were designed to support war veterans, families of soldiers, and low-income citizens. But over time, these foundations grew into massive economic institutions. Today, they operate in industries like agriculture, manufacturing, construction, transportation, hotels, shipping. Some estimates suggest these organizations influence around 20% of Iran's entire economy. That's enormous. But what makes them especially powerful is their unique status. Many of these foundations do not pay taxes, receive government subsidies, have limited financial transparency, and instead of reporting to elected officials or shareholders, some of them report directly to Iran's highest leadership. This creates an unusual situation. Private entrepreneurs often struggle to compete against organizations with these advantages. Imagine starting a small business and competing with a massive company that doesn't pay taxes and receives government support. It's extremely difficult. But there's another layer to this system. Many of these organizations also employ huge numbers of workers, sometimes far more than a normal business would need. This reduces efficiency, but it also creates jobs. which means reforming these institutions could suddenly leave millions of people unemployed, and that makes economic reform extremely complicated. But internal economic structure is only one part of the puzzle. The next piece is something that dominates headlines around the world: sanctions. Sanctions, the economic pressure point. Since the 1979 revolution, Iran has faced multiple waves of international sanctions. These restrictions mainly come from the United States, along with partners in Europe. Sanctions affect Iran in several major ways. First, banking. Iranian banks are largely disconnected from the global financial system. This means transferring money across borders becomes very difficult. Second, trade. Foreign companies risk severe penalties if they do business with Iran, so most global corporations simply stay away. Third, technology. Certain advanced technologies cannot be legally exported to Iran, which slows down industrial development. But perhaps the biggest impact involves oil exports. Oil is the backbone of Iran's economy. It generates a large portion of government revenue. Sanctions limit how easily Iran can sell that oil. As a result, Iran often sells oil at discounted prices through complex networks of intermediaries. These middlemen reduce profits and increase inefficiencies. The entire system becomes more expensive and less transparent. But sanctions have another indirect effect. They make foreign investors extremely cautious. When global companies avoid investing in infrastructure, factories, or technology inside Iran, economic growth slows dramatically. And that leads to another major challenge: currency instability. The currency problem. Over the past decade, Iran's currency, the rial, has lost a significant amount of value. When a currency weakens, everyday life becomes more expensive. Imported goods cost more, savings lose purchasing power, and inflation begins to rise. At times, Iran's inflation rate has climbed above 40% per year. That means prices can double in just a few years. To cope with this situation, many Iranians look for alternative ways to store value. Some buy gold, others buy foreign currency. Many invest in real estate or stocks. Interestingly, this is why Iran's stock market sometimes rises during economic crises. People aren't always investing because companies are doing well. They're investing because holding cash becomes dangerous. When inflation is high, money loses value quickly, so people search for anything that can protect their savings. But even inflation isn't the full picture. There's another factor that quietly shapes Iran's economic situation, and that's regional geopolitics. The cost of regional influence. Iran plays a significant role in Middle Eastern geopolitics. The country supports several political and military groups across the region. These alliances serve strategic purposes. From Iran's perspective, they help maintain regional influence and security. But these relationships also come with financial costs. Supporting partners abroad requires billions of dollars over time. Critics argue that these funds could instead be used for domestic development, things like infrastructure, industry, or economic modernization. Supporters argue that regional influence strengthens Iran's long-term strategic position. This debate continues both inside and outside the country, and it highlights the complex trade-offs between economic priorities and geopolitical strategy. The brain drain problem. Perhaps the most worrying economic trend for Iran is something called brain drain. This happens when highly educated and skilled people leave a country to pursue better opportunities elsewhere. Many young Iranian engineers, scientists, and entrepreneurs move abroad, not because they want to leave their country, but because they see more opportunities overseas. Over time, this migration represents a major economic loss. Some estimates suggest the cost of lost talent could reach hundreds of billions of dollars in potential economic value. Losing skilled workers makes innovation and growth much harder, and that creates a long-term challenge for the country's economic future.
final perspective. When you look at Iran from the outside, the contradiction becomes clear. This is a nation with massive natural resources, strategic geography, and a highly educated population. Few countries possess all three. Yet economic performance has been limited by a combination of factors: internal economic structures, heavy subsidies, international sanctions, inflation and currency instability, and geopolitical spending. Despite all of this, Iran's economy continues to operate. Businesses function, markets adapt, and people find creative ways to navigate the system. But the biggest question remains unanswered. If Iran were fully connected to the global economy, if sanctions disappeared, if investment flowed freely, could Iran become one of the world's major economic powers?
Or will these structural challenges continue to hold it back? Only the future will reveal the answer.